Hello, my name is Yana, and today I want to present you a presentation on the topic Social Security, Medicare, and Unemployment Taxes. Also, we are going to review an article. Learning objectives: Social Security taxes, Medicare taxes, unemployment taxes. An article review: Millions are suddenly working from home. Can they claim a tax break? Let's talk about FICA taxes first, which include Social Security and Medicare taxes. There are certain taxes of income that everyone has to pay, and FICA taxes are at the top of the list, and employers must withhold these taxes from employee paycheck and pay them to the Internal Revenue Service. FICA taxes are the Social Security and Medicare taxes paid by individuals and employers. FICA taxes are called payroll taxes because they are based on the amount paid to employees. These taxes have two elements: withheld from employee paychecks and paid by employee and employers for Social Security and Medicare. This presentation we will find out about how to calculate FICA taxes, how to report and pay these taxes, what earnings are now part of FICA taxes, and more. The term FICA is short for the Federal Insurance Contribution Act. This act was introduced in the 1930s to pay for Social Security. Medicare was added later. The breakdown of FICA taxes. The total FICA taxes is 15.3%. This percentage is applied to the employee's gross pay. The employer and employees each pay 7.65%. Here is breakdown for these taxes. Within the 7.65%, the portion is 6.2% up to the annual maximum wages subject to the Social Security. The Medicare portion is 1.45% for each employee and all employees' earnings. In October 10, 2019, the Social Security Administration announced that the 2020 Social Security base will be 137,700. From this table, we can see how pay taxes, in what portion, and what is employee part and what is employer part. Here we see that 6.2 from employer and 6.2 employees part, as well as Medicare. What wages are subject to withholding? The IRS said that these taxes are due on wages paid for service performed as an employee in the United States, regardless of the citizenship or residence, or either the employee or the employer. In other words, anyone working as an employee in the United States must have Social Security and Medicare tax withheld from wages. At the time of employees pay, the FICA taxes is calculated on the gross pay of that individual. Here is how it works. The employee gross is calculated to the pay period depending on whether the employee is salaried or hourly. The gross paid amount is used to calculate withholding for federal and state income based on the employee W-4 form. The gross pay amount is also used to calculate withholding for the FICA taxes. Let's review an example. Paul earned a gross pay of $400. This current year taxable earnings for Social Security tax up to date are $83,900. At the solution, current period taxable earnings of $400 added to the year-to-the-date earnings of $83,900. The result is $84,300. Result doesn't exceed the taxable base of $137,700. Social Security tax for this employee is $24.80, and Medicare tax is $5.80. What income doesn't count for the Social Security? The first $20 of most income received in month, the value of Supplement Nutrition Assistance Program, STEM foods received, income tax refund, home energy assistance based on need funded by a state or local government or an Indian tribe, small amount of income received irregularly or infrequently, interest or dividends earned on countable resources or resources excluded under other federal laws. Grants, scholarship, fellowship, or gifts used for tuition and educational expense, food and shelter based on need provided by non-profit agencies, disaster assistance. Now let's talk about FUTA taxes. FUTA taxes, the Federal Unemployment Tax Act, is a federal law that requires employers to pay unemployment taxes. These taxes fund the federal government's oversight of the unemployment program in all 50 states. Typically, only employers pay FUTA taxes. Every employer must calculate tax liability for each payroll. Set aside an amount after each payroll equal to that liability. Make periodic payments to the IRS based on the amount owed. Submit an annual report on a Form 940, Employer's Annual Federal Unemployment Tax Return. Also, employers have to pay FUTA taxes. Calculating your FUTA tax liability, you must pay federal unemployment tax based on employee wages or salaries. The FUTA tax is 6% on the first $7,000 of income for each employee. Most employers receive a maximum credit of up to 5.4% against the FUTA tax for allowable state unemployment tax. Consequently, the effective rate works out to 0.6%. Now we are going to our second part of the presentation. This article review from Wall Street Journal named Millions are suddenly working from home. Can they claim a tax break? Written by Laura Sanders. This article is about coronavirus pandemic, working from home, what expenses can be deducted from income, and reduce taxable income. Purpose of writing this article: does your remote work qualifies for any tax breaks? Now let's read some important ideas from this article. Due to the coronavirus pandemic, millions of Americans are forced to work from home. Both employers and employees are wondering how they will pay taxes and expenses they can deduct. Most of these people must convert their bedrooms into offices. This means that people must buy chairs, tables, or some of them even computers. Employees will pay increased expenses, utility expenses, though whose responsibility is it in form situation? Who can claim it as expenses in tax purposes? One was a partial deduction from unreimbursement employee expenses such as home office or union dues, but employers can claim these deductions based on reimbursement to the worker. The good news for the worker is that the breaks can help employers with the range of pandemic expenses, and the payments don't count as compensation either for income or FICA taxes. A simple way for many employers to help employees who have costs from working at home due to the pandemic is to reimburse them under Section 139 of the Federal Tax Code. This law passed in the wake of 9/11 terrorist attacks and allows a reimbursement or payments for reasonable and necessary personal, family living, or funeral expenses due an eligible disaster. Note that this law allows deduction for payments or reasonable expenses. That seems intended to be more general than ordinary expenses. The term elsewhere in the law, said Mrs. Murphy. It could include, say, full reimbursement of expenses for child care as well as for computer or additional utility costs. Under Section 139, disaster payment can be tax-free for workers and deductible by the company. Shareholders who are also employees of an S or C corporation can qualify for them as well. Directors and partners may be eligible for these payments, although the law isn't clear. Unusually for the tax code, Section 139 cuts red tape. Payments don't have to be included on a worker's W-2 form, and the company doesn't have to document actual expenses as long as payments are expected to be close to them. Complex employee benefits rules about which workers get what benefit don't apply either. And conclusion, today we talked about what is FICA taxes, we defined what is included in FICA taxes, Social Security and Medicare taxes, we defined how to calculate Social Security taxes along with Medicare taxes. We talked about also FUTA taxes, namely rates. In this presentation, we talk about even article that was written by Laura Saunders. The most important points in this article, namely how millions of Americans working from home due to the coronavirus pandemic will be qualified for any tax breaks. Conclusion made by me after this article is optimistic. Here are the sources that I used to present to you my presentation, and thank you for the attention.